I'm here at the London Stock Exchange where I've been chairing a business awards evening, and a member of the stock exchange themselves is saying, what will the future capital markets be? Here is a stock exchange, one of the largest exchanges in the world, that exists really for one purpose only, which is to connect people who have capital with people who need it. To be able to engage huge amounts of money, bring it into a company, and enable that company to grow with resources that they could never find if they were privately owned. Now, the very fact that someone within the stock exchange can even be asking whether in 25 years' time we will have capital markets in the way we know it today shows us that something is changing. And you might say, of course it is. Just look at the bloodbath of 2008 and 2009. Actually, there's one surprise in it all, which is that there's still a physical building here. To me, it's a surprise. I'm a futurist. In 1999, I predicted the end of traditional stock exchanges because, after all, in theory, anything that can be done on a physical stock exchange can be done on a website by connecting people virtually who've got capital with those that need to raise capital. And we've seen electronic exchanges. The London Stock Exchange was one of the first exchanges to go virtual. But yet it has a physical building. It still has a geographic presence. It is still true that a huge amount of the trading done on the London floor, the electronic floor of the stock exchange, is done here in London by people who commute into London every single day. They could, in theory, work from home, but they choose to breathe the same air on trading floors with thousands of screens, operating in a community to try and outguess where the markets are going next. And this is something that is interesting for those who have thought, as I did, that such things would become virtual much more quickly. The capacity of human beings to think about the future in isolation from each other is limited. Yes, of course, we can do it on Twitter, and I've done it. I've got 27,000 followers. I can put out a question, and I get all kinds of help and advice on all kinds of issues within a few seconds. But the ability to think in complex ways about what's going to happen next in a multidimensional environment, human beings, it turns out, find that quite difficult to do without being face-to-face with people they can have coffee with, walk along the corridor with, interact with in various ways. And that is why I now think that physical trading communities will survive for much longer than I'd supposed before, maybe another 10, 15 years. I don't mean necessarily that everyone's trading in the same place. I don't mean a physical trading floor where people are shouting things to each other. I mean that people who are in that kind of activity will be continuing to want to go into the same workplace where they can share the stresses and strains and the insights and experience that they have to try and outguess what tomorrow's trends will be, or indeed to try and create the trends of the future. Now, in it all, we will see further fundamental trends and changes take place. The continuing erosion for stock exchanges of the amount of money that people are prepared to pay for an individual trade. The elevation of alternative platforms. But the big issue for those alternative platforms is this: liquidity. You have to have enough muscle, enough people trading minute after minute, hour after hour, to be able to absorb a big sale without a big spike or fall in price. And that means sheer volume, sheer numbers of trillions of dollars of shares that are connected in some way that will provide some kind of core stability in the system. Now, the other strange thing about stock exchanges, of course, is that they open and they close. And in a virtual world, they shouldn't. In a virtual world, you would imagine that the London Stock Exchange, the New York Stock Exchange, the Hong Kong Stock Exchange, for example, would be so intimately connected, one effective virtual platform, that anyone would be able to trade any share, any time, from the same place, completely seamlessly. Now, in practice, that happens. Traders sitting on a floor of a trading department in HSBC in London or in Hong Kong can, if they wish to stay up all night, trade all the way around the world. But it hasn't quite connected up, again, in the way that I expected maybe 10 or 12 years ago. And we'll have to see how that plays out. Again, it's part of this physicality that you have a community of people who live in one country who actually do want to start work whenever it is, 9, 8, 7 or even 6 in the morning, but they want to engage with others in a relatively small time zone on the future of the stocks that they're trading in that time zone. And we'll have to see what happens in the future. We will see all kinds of new trading models. But the challenge of liquidity, the challenge of getting this volume of concentration will mean that there will be only a limited number of exchanges that will survive in future, whether they're virtual or physical, whether they're joined up transnationally, transregionally or not. There just is not enough liquidity for the biggest players to be able to operate without this huge amount of concentration. So watch this space. We'll see what happens in capital markets.